And now I would like to give a warm welcome to our today's panel moderator, Halsey Martin, founder and CEO at 10 Capital Network. Over to you, Hall.
Thank you, Natalia, and thank you guys for having us again today. My name is Hall Martin. I'm the CEO and founder of 10 Capital. And today we're going to talk about how to monetize your data, your startup's data. And with that, let's bring on our two panelists, Andrew Romans and Alexander McCaig. If you could go and turn on your video. Let's start off with some short introductions there. Alexander, can you tell us more about yourself and your firm?
Sure, absolutely. First of all, I'd like to thank everyone for putting this panel together today. Very excited to educate. It's fundamentally some of the most important things that we can do, whether it be for investors or other businesses out there or the community that use these products or services. And for context, Tartle has created a peer-to-peer marketplace that allows consumers to directly engage with enterprises in terms of a data sharing arrangement. And it comes with a blockchain record of exchange and consent. And so the benefit for the consumer in this aspect is they get a financial incentive for sharing this first and zero-party data. And for the enterprises, they get to train their AI models and have a better lifetime engagement through an iterative data approach with consumers at large all across the globe.
Great. Thank you, Alexander. And Andrew, can you tell us more about yourself and your firm?
Sure. I'm an entrepreneur turned venture capitalist. I had a number of startups, raised a couple $100 million from VCs, mainly in Silicon Valley, and had an IPO and M&A exit and stellar failure as well. And now we're investing out of Fund 3 as a venture capital group, 7 VC Venture Capital. We typically invest into Series A focused companies with most of the fund, and then about a third of the fund is pre-Series A, where most of the companies have 100K of monthly reoccurring revenue at our first entry point. And then we'll fund them with SPVs all the way to exit. We're mainly software driven. So no hardware, no healthcare type stuff. And we're, kind of a unique thing about us is that we're backed by a global group of angels and family offices and corporates that get very involved in the fund. So there's almost like an angel group element that some of our LPs take board seats on behalf of the fund or get really involved in the process. So I kind of think you shouldn't be allowed to invest in a company unless you're adding value. And most VCs can't do it all alone. So it kind of takes a village to raise a startup.
Great, thanks. Well, my first question to the panelists is, what's the main trend in the data analytics space today? Alexander, what would you call out as the main trend you're seeing so far?
Sure. So I do a lot of work speaking with the Fortune 100, specifically here in the United States. And there are three essentially items that go into the problem set, the pain points that they're feeling, which are major macro trends in the industry. The first one being is that the world of cookies is going away. So third-party data tracking mechanisms in the ad tech market are coming to a point where if I'm trying to market my products or services to the greater community at large, my ability to properly feed the algorithms and pinpoint the individuals I want seeing those ads is going away. On top of that, you have changes in regulation around third-party data collection, where regulation is pushing the control and the ownership back into the hands of the individuals for the data sharing effort. And you pair on top of that the aspects that these enterprises have invested, in lump about a couple $2 billion into their CDP and CRM deployments to really understand the journey of individuals like Hall or Andrew as they're going through their journey as a consumer, whether it be online or when you walk into a brick and mortar store, to understand what those behaviors and habits are. Now, because that pipe is being turned off and there's so much liability around third-party data, but there's so much investment that's gone into what you would say the ability to understand consumer journeys. The focus now is said, how do we turn to a zero first-party data strategy? And how do we get that to natively map into our systems that we've currently invested in so that we can even better understand what's going on with consumers using their data and opening up this iterative lifetime engagement? And one of the aspects, one of the big things is that the enterprises don't want a very large lift to integrate with these new platforms. So having strategies that are API first, that are very light lift of integration into other enterprise systems proves to be very beneficial in the market itself to help fill that data-driven strategy. And so as those companies turn to adopt these strategies themselves, you find that it's great to have the data, but how else do you have the so what? So on top of data and data's monetization, how do you take that information, whether you be the startup or the larger enterprise, and drive yourself into understanding what those key takeaways are? What are those insights, whether the analytical, right, quantitative or qualitative, that say, if I'm going to put a resource dollar out, whether it be into marketing or be into a new product or service, I'm going to put it directly where it needs to go. And I'm going to do that off a data-driven initiative.
Great, thanks for that. Andrew, what's your take on the main trend so far?
I think what's kind of changing now that feels like we're at the dawn of a new age where search is really improved. So you kind of had like Yahoo, Lycos, Google search, where you're just typing in words and seeing if those words are matched somehow coming back. And we've moved into a new era of natural language processing, NLP, with companies like Kindi that we've invested in, where their search can differentiate between this is a river bank or that's a Bank of America where you deposit and borrow money. And so it's getting just way more sophisticated on the ability for essentially software to search through data. So, having all the legal cases on Martindale Hubbard with like a LexisNexis thing, even before the internet, was pretty amazing. But, you can't speak to it like a human, So I think that this is really interesting that we are able to create software that can search through 1 million documents in a second and then do it continuously, and then maybe have like programmatic compliance into things. So it's like smart contract type of logic, like from a blockchain world, to just like making sure that a pharmaceutical company, the clinical trial information is matching what the warning label says. Like, so I think it's an amazing era that we're entering into, and it's kind of like automate human workflows with software. And I like Alexander's comment of API. You want to basically API into as much proprietary data sets, public data sets, for purchase data sets. And if you're not doing that, like the Fortune 1000 companies that are talking to Alexander, if they're not doing this, like they're going to get dusted. Like they're going to go bankrupt or miss their self-actualization opportunity.
Can I piggyback on that? And
Sure. Yeah,
Andrew,
of course.
You make a really good point here. So many of these software systems and things that are smart contract based, these fabrics for training these algorithms are fundamentally fed by data. And those inputs can come from two different things. Those inputs come from observational systems, ones that are observing the interactions that people have with technology. And the other one happens from input, which gives context into things like the river bank or the bank, which may be Bank of America. And what we'll see with these flows that going forward with the onset of enhanced AI or machine learning and systems like GTP4 is that there's nuances to what is being recorded in the input that people have. And with the Web3 world, as we're putting more of the input we have in a more sovereign sense online as consumers, people that are generating the data, will fundamentally enhance the fabric of these other systems, which are giving us reports on what we want, or enhancing the human workflow by taking care of automations that are frankly unnecessary in our time, but are good extensions of what we are doing currently in our life so we can focus on things that are more important. And you talked about search. And search is a really key thing because if we think about, again, those early days of LexisNexis or what was going on with Google, they're out there, they're indexing vast amounts of information. And in a Web3 forward world, how is it that you index something when it's not in the hands of a centralized server, but in the hands of people or businesses at large that are the rightful owners of these data assets? So that requires these technologies, these peer-to-peer technologies, fundamentally supported by blockchain tech and how that gets evolved and sharded off into very different industries and technologies, is that it's no longer about searching index web pages, but moving to how we search the data of people. And I think that's going to be a very interesting macro trend, one that we are helping drive over here at Tartle, is that if people are in control of this information, how is it that I have the simplicity where if I were to go to Google and type something in, and whether it be natural language processing because I'm speaking to a Google search and it brings me to a page, How is it that I can type a search and will help me search through the vast amount of people's data using fundamentals like smart contracts and advanced encryption by offering the consent, offering the encryption, taking a zero first party data strategy, but still getting the information that you need, but having it more granular, more poignant, more natively mapped into those systems for the NLP, for that searching, for our algorithms so that the businesses can make better decisions. And so if we look at that fabric, the fabric's going to be the connection that happens using blockchain tech to bridge all these different systems and people together in the Web3 format to feed all these greater things that automate the functions of our life and business flows that really don't need to be, so burdensome of our time. So that search thing, I think, is going to be a massive windfall for humanity and technology going forward as we move it into the more decentralized efforts and put it towards the ability to search through people and their data itself.
Great, thank you for that. My next question for both of you is, let's start with you, Andrew, first, is when you look at a data analytics company, what do you look for to determine that's a good investment or not?
Well, like a couple of things, like a simple test I like to kind of have a conversation with myself on is, would I want to quit my job and do sales for this company? Like, would I literally want to quit my job and then do sales for this company? And like a lot of the blockchain companies, and I was deep into blockchain. I wrote a book, Masters of Blockchain. I was keynoting at 3 events a week for 2017 and 2018, probably. But, a lot of those guys have a really hard sell, like if you were to go to my publisher, McGraw-Hill, and say, hey, let's put the API to Amazon and Barnes and Nobles on a blockchain so you can stop stealing from Andrew Romans, the author. They don't want to do that and pay money to be made honest. Like, forget it. Like the artist formerly known as Prince hated his record label. I don't trust McGraw-Hill as my publisher. I'm sure they're not listening to this, and I don't care if they are. But so one thing, it's like a simple test. Like, is this like easy to sell? Am I selling deck when it was half the price of a IBM mainframe and twice as fast? Like, you wanted to work for DEC, selling those mainframes and murdering rent-seeking, IBM. Another thing I like to think in this world of like data is the oil, and does this startup, is it a good investment? Does the software do the job of a human for like an annualized salary for less than the cost of hiring that person? So like there's an Austin company that we're in due diligence in now that is basically scraping data off the web that's free. So Alexander, it's not all about like us individuals and owning our data and giving permissions to, harvest our oil data where we're the product. But like these guys are helping real estate people trying to figure out where to build that next real estate development in Austin or somewhere in Texas or anywhere in the world. Or they're looking at where to put their massive rollout of expensive beauty parlors or like hairdressers. And these guys are getting more data than you can believe. Like they're looking at the school rating went from 9 to 8 to 7. What does that mean? They're looking at like just tons and tons and tons of different factors. And they're like, Palantir found Osama bin Laden with like, if you've ever been to Somalia and you received a phone call from that bad actor, and we've spotted you in a hot mosque in London, there's going to be like men in black following you within 5 minutes, that or 1 minute. Whereas like now they're saying, what does it cost to hire some brilliant PhD guy or woman to do all this research of where to put the beauty parlor or where to buy the next Steiner Ranch development that, is like Blackstone, BlackRock backed money investments? That is it cheaper to just pay for the goddamn software company in Austin to get to scrape continuously all this information? And I was like, so what are we paying for data? Like, what? It's all free. That's cheaper than hiring, some like PhD from UT to do that work. And then what about, it would cost 11 people to do that work, or they are doing that work and they're effing it up and they're not good at it, where like the computer is faster than the horse, situation. So I think if you can get to the point that you can say, what does it cost on an annual fully burdened basis? Chair, laptop, backing up our computer, or do we just pay the software and sleep at night knowing this is all they do and they're getting better every minute? And then they keep adding verticals up to their data set that are cross-pollinating their ability to like say, where do we put car washes? You know, if they're going to pave the whole world over, these guys are telling you where to, kill a tree and put pavement. I'm just kidding, with that.
No.
Great.
And
No, thank you for that. Alexander, what's your take?
sure, because you asked what makes a good data analytics company essentially excellent. And we have a lot of conversations with data analytics firms. And you can start with one aspect of it is the economic aspect. Is this a viable solution for us? And you can look at that cost weight against the actual human resource element that you would pay for people to do the analysis. Now, for those firms that are collecting vast amounts of information, scraping it from the internet, they are scraping what is inherently lagging indicators of information. That stuff has to occur. And then beyond that, it has to be posted somewhere and it can be reposted. And with those issues, if you don't have a data analytics firm that can recognize oversaturation in the models, you can find yourself in a serious issue. And the firms that are looking forward, firms that deliver the insights in the data analytics and they can do it efficiently, where it doesn't require a labor intensive team to understand it. Maybe it's something that's visual or something that's, very simple for me to read and take, action upon, is where there's going to be a lot of weight and value in that firm going forward. And the firm understands in a regulatory sense that their models aren't fundamentally built on something that is changing and will go against them in the future. We'll have to rework and retrain everything. And they look at ingesting a more balanced model now where you have the people that are actively driving the car through the car wash and then also getting that real estate or zoning information or satellite imagery and pairing those things together to build a fully burdened model, which is how I would describe it, where you get the input from people and you get the input from systems, right? And you bring those together to get that full picture. That's when you have highly effective models. And if those models can be delivered in a stance where anybody of any, layman's point can read it and understand it, then you have a good data analytics company, because that's where effective decision-making and great resilience in the models and knowing that the data is fundamentally sound, which is going into it, is something that can be reused iteratively and repurposed into the future foreseeably until things change beyond what we currently know today in terms of our technological capacity. I hope that makes sense.
It does. It's great information. My next question for both of you is, how does monetizing data impact the valuation of a startup? If they start with selling a service and then they add data onto it, what happens to their valuation overall? Andrew, what's your take?
Well, it's similar to the previous question of like what makes a good investment. That, as an active investor, and I talk to a lot of startups seeking to invest and make a big gain and it go up in valuation. To your second point, is sometimes the company is presenting itself a little bit fraudulently. Like they say, we do this and we automate all of this. Like take, for example, I run a venture capital fund. I pay humans that are in the United States and the Philippines to do all this work on our like 75 SPVs and our different venture capital funds, and ultimately deliver all this accounting stuff and K1s. That you have companies that will say, we've written software to do all of this perfectly automated with all this data. We're like Carta going up and down vertically. And when you dig in, you figure out that they're lying as an investor and that they're really doing it in Manila. It's humans doing this work manually. Like they're using fax machines, and walking around in an office, as opposed to that software, just, smart contract, programmatic, no middleman, whatever, blockchain utopia. So you got to dig in and figure out like what is a legacy business that was a services business that would have a low multiple of revenue from a valuation standpoint on raising capital or exiting, publicly traded multiple on that, or M&A multiple on that, or what it's worth somebody to acquire. And so that's like, one thing to look out for. I guess on layering data, I think that the whole idea that you write software that can process data for the cost of a human or in a way the human could never, ever perform, I think that humankind is just on a natural progression of evolution towards more and more and more of that. So I think it's like there's a lot of opportunity for startups to create software that automates a human workflow that taps into a data set and then adds more and more and more and more.
Yeah. And
Alex?
yeah, that's a good point on the value here. So I'll give context and example to how firms currently, monetize their data sets that they have in place. Now, for instance, say I am an events company and I'm doing some stuff with Red Bull, and we hold this like really big event, and we've been collecting this point of sale data on people like buying drinks and how much they're spending at the event. All well and good. Now, does it tell Red Bull whether or not this was a hit or that there was something that was effectually like a miss, right? So for that business itself, which is running the event for Red Bull, how is it that, Red Bull gets this information from the event host to say, what is it that we can do better next time? And so now this is going to open up the opportunity for this startup or whoever it may be to say, okay, how do I take the data that I've been collecting, whether it be in point of sale and information from the people that were at the event, and turn that into something that can be monetized when I have my conversation with, Red Bull for a next event that we want to hold, right? How do I go to them with something actionable and suggest what the upsell might be, right? Or what was the miss before? Now, how this would occur is like when that data is being collected, there's also a firm that, data that I have specifically as a startup, right? I'm using this live events example. I could send that into Tartle, right? With the data I've collected, sourced directly from individuals that were participating at the event. And then the AI system that Tartle has is going to generate this report, again, giving you a summary, key takeaways, actionable insights, and telling you also where the gaps are. So it's going to suggest to you what you should do next or what should be collected. Now, at this point, what you've done is you've taken the material data you've owned as an asset on your books, and you've paired it with data you've collected from people that you're going to get lifetime engagement from, right? So there's value here because they're going to put dollars back into the business itself. And then from that, you can take that reporting and bring it right over to Red Bull and have a conversation with their upper executive management and say, hey, this is what we found at the current event, and this is what we need to do going forward. And this is going to be the return we could probably expect from it, given these misses that we had at the current event we just held. Now, for the business that is monetizing that data, their benefit is two things. One, they get the benefit of opening up that engagement for people going forward. All right, we've now taken data from the outside, brought it into our system, and brought our own data and created an asset with it, some sort of value or analysis, which is very important in the business to business side of the industry for doing that cross-selling. And when you have something like that, you have that vast amount of data and you have connection with people, the value of your books increases because you're going to have a lower churn rate. You're going to have an easier cross-sell. The valuation is going to increase from the point that you can monetize the cash flow of actually selling this data set you have now generated. And you can use technology like Tartle to do so, to say that, okay, now I have this brand new data set. Maybe I want to sell that analysis not only to Red Bull, but to all their competitors. This is interesting. So there's a new stream of cash flow just outside of the point of sale system that you have, but these new data analysis assets that have been created, which you can then use, put on a marketplace, then go sell to many people at once. And we all know that the fundamental factors that go into valuation for a company, right? And if you're a startup trying to monetize your data, is cash flow and getting those recurring revenues, getting the attention of people like Andrew Romans, like getting that 100,000 a month in recurring revenue. That can help be supplemented with having these new data assets you're generating by using technology, using resources, and creating new sets of analysis, which are very valuable to the market that currently aren't in place. So that's where you want to look to that, increasing the valuation of you as a startup and monetizing that internal data that you have.
I've experienced a lot of startups that say, this is our business and this is where our revenue comes from, but that looks like a crap business, obviously, but don't worry, because we're going to eventually get all this money from this data. Because like we know everybody who's drinking peach schnapps in the Lower East Side, which is probably the worst thing to drink, they're saying, just imagine what we'll get on the data. I'm like, yeah, I'm imagining, I don't see it. What I'm imagining is this is your business today and you don't know how to monetize that data and you're talking about it. The fundamentals, like everybody on this call knows this, but it's like, go back to your MBA, you have a discounted cash flow and you have comparables. And so you're like, what is the top line revenue? What is the bottom line net income? So are you a high margin software subscription thing that everybody just downloads Skype while you sit there in the archipelago on your boat in Sweden doing nothing, and it's all pure download software, scalable, high margin sales? Or is it like fight in the trenches and professional services is 90% of your business and it's 10% licensing, you know? That so it's top line, bottom line, G, growth. That is what, and what's the interest rate or whack of discounting cash flows from the future? So interest rates are going up, so valuations should be coming down if we're discounting, you know, year 5 by a higher interest rate to get to today. So that's like discounted cash flow where margins matter. And so if it's a scalable software thing, it's better than like I pay all these worker bees at Accenture less than what I bill them out for it. It's very human capital intensive. The other one is comps. You know, we have a bunch of investment bankers that have personally or from the partnership invested in our fund. And we talk to them before investing sometimes because we talk to them all the time, or after we've invested. Hey, what do you think the multiple is of sales for this company to sell for? They went from like 10 million to now 750 million a year. If they're at 750 million a year, is it 4x? Is it 12x? What is it? And it's different for different industries. And that's where your comps come in. Like I remember saying to Reid Hoffman once when he was still CEO of LinkedIn, I said, look, I hate Salesforce. I use them. It's my CRM, but I hate them ever since I got off of ACT. Why don't we kill Salesforce and have you start letting people put notes on each LinkedIn connection, and then eventually add, you know, get some engineers to make it like as good as Salesforce, and it'll be the ultimate user-generated CRM. So Hall Martin changes his phone number, and it's right away in my CRM. Benioff couldn't compete with Reid Hoffman. I said, look at the multiple of their revenue for reoccurring SaaS revenue at Salesforce. They've basically outsourced all the professional services so that they are pure margin. And look at the multiple that the market gives you for your, you know, advertising and headhunting business. It's nothing. So at the end of the day, these multiples are not in our control, but you can do comps and figure out what the multiple is. So, I mean, that's really your valuation thing. Having truly scalable top line, bottom line margin growth, and it's growing fast and it's a high margin business, as opposed to talking about one day we will figure out how to monetize this data. In the meantime, you have a really shitty business. So give me a higher valuation because I'm trying to layer on some icing on this otherwise boring cake.
What's interesting now is that the boring cake, our technology is no longer the icing. This is truly a supplemental cash flow system for people that want to monetize the data, and anybody has the ability to participate in it. So in terms of pricing that data, we do that because we can help price it with public pricing that we currently have in place on the marketplace. And 2, as a majority of companies going forward, whether it be e-commerce or anybody who's a mom and pop, has to take on some moderate digital strategy, whether it be through Google Ads or something else, they need to find ways to take that data and help supplement the cash flows. And so if you want to decrease, like you said, Andrews, like have that efficient scaling and decrease that OpEx so you have growth in the top and bottom line, it's nice to have tools or technologies like Turtle to say, if I want to monetize that data in my startup, it's no longer a question of, oh, you know, pie in the sky kind of thing now that it's here. It's like, if we have that data, let's pair it together. Let's generate an asset. Let's put it in a marketplace that it can be sold at. Much like if I'm going to go list something on Amazon, I'm going to open that up. And when that thing gets sold, people can purchase it and I get cold hard cash back into the company account. And that right there is a real transaction which the company is doing. And it's one that people and enterprises can both participate in. And I will see that going forward, and we see it now, is that it will begin to change where, yes, you have those comps. Yes, those multiples are in place. But as a majority, almost 90+% of the world will transition into these data first strategies with their business, whatever it might be, data is going to become a massive play for feeding many of those things in the journey of their customers in a B2B sense or a B2C sense. And we'll see that that data will be readily and easily through API driven technologies connected to our marketplaces, and people can just monetize this day in and day out what they are generating as very unique data sets. And that will add a whole new statistical level of valuations that we hadn't seen before, but will trend into increasing the valuations, not dramatically, but enough where it's just beyond, not only am I selling clothing online, but also have interesting things or deltas in the consumer behavior that many other brands like H&M may find truly valuable. So I will see that, and I anticipate valuations will have an increased lift, and the decrease in the burden and the less of the pie in the sky or icing on the cake stuff where, oh yeah, I can possibly monetize this. People are actively doing it right now today. So I have much optimism for that going forward.
Cool.
My experience was I have a client that actually had of oil services businesses, and they were going out to sell the business, and the comp at the time for them and their sector and space and market was 5x revenue. But then he found, according to the comps, that if he were monetizing his data, he would get 10x times revenue, because the data was worth as much as the actual oil service that he was providing. Of course, your mileage may vary, but it's just another data point to put out there. My last question for you guys, we have just 4 minutes left, is how does AI fit into all of this? Where does it come into play, and does it come into play at all? Alexander, what do you take?
Yeah, it's a very, very poignant question you have here regarding AI. So artificial intelligence in and of itself is a little bit of a misnomer of an industry word, right? Intelligence is a very difficult thing to create, but the fundamentals of these things, which are models, what they do is they ingest information, they test it through something. So if I'm going to give you an input, I want this output. And if that output is what I want, I'm going to tell that system, and it's going to repeat this process many times over with as much information to hopefully give me what I want to know, or look for holes in something, or maybe take some sort of statistical guess on what the outcome may be baked onto historical information. Now, AI going forward on this data monetization is going to be really important. This is why we added a lot of this aspect to our own product offering, to say that we'll do the AI for you. We have our own models that get trained, and we'll generate what that so what is. And as we go forward in the vast amount of systems that are connected to the internet, you have 5G, your car is its own computer, right? And those are generating so much information. How is it that we take the vast amounts of data and we look at all these different outliers and train systems so that it's really going to be beneficial for the human element? How do we automate those workflows like Andrew had talked about? How do we truly know when someone's going to take a left or a right-hand turn? And what we'll see is that there's going to be great advancements with AI when the models are trained properly. But in the beginning, people must understand that there's a human element. There's a testing that has to occur. If I have an algorithm for how I put my pants on in the morning, I do my left leg first, then my right. Well, that's how I'm going to start with my model. But as data comes in and I get my outputs from that model learning, it's going to find that a vast majority of the population puts their right leg in first before their left leg, right? But the thing is, we have these biases that go into AI in the beginning. And what we'll find is that if we have advancements in data and more of these outputs that are coming in from these models, it's going to refine the initial algorithms that we have. So we have things that are truly more meaningful and truthful and real life representations of what people are doing and what they are going to do. So AI is going to take a very strong approach, but we are only in the earliest days of it. And having quality data and a reduction in biases for the algorithms and their models is going to be of tremendous benefit for humans and businesses for I would say, the next 20 years as this thing really starts to ramp up in its evolution.
Great, thanks. And Andrew, we have 2 minutes left. What's your take?
Yeah, to keep it really short, I'd say one thing I've noticed when you look at lots of different companies is how long does it take for their technology to become effective in this application or environment? And what you'll find is that there's one company where it's almost instantaneous. It is able to process that data and give outputs that are worth money to the customer, either making more money or saving money or giving them something they need. Other ones, you'll see that they haven't invested in technology yet to the level of the other one, because it took literally 6 months of training on this data before it's effectively working. So something that I look at, pay attention to, is how long does it take for this thing to get up and running for that customer? And you'll find that, back to fundamentals, the discounted cash flow of this company is doing better than that one, that they're just 4xing revenue year over year, and it's growing really, really fast with a land and expand happy set of logo customers.
You're right about that.
Great.
And Can I just say one more thing on that time
Yeah.
for
Yes.
training? What you find is that a large majority of the market, this training data and the training algorithms are open source now. So many of the things are borrowed. So the acceleration of training and getting things off the ground, that long tail is going to disappear, and you'll find that the training, the curve is going to be much more to the left. So that as many of these engineers are borrowing algorithms, ones that have been used and pre-trained, and adopting another model and doing slight changes to it, there's going to be a much quicker uptime. But the question is, who then is going to be the breadwinner in getting the best data into their algorithms and reducing the most amount of biases? And that's where you're going to see the true winners in the AI.
Great. Well, I want to thank you guys. We're at the end of our time. Alexander, Andrew, thank you for joining us today. Thank you for your time, wisdom, and expertise. And with that, we'll go and close the panel and move to our startup pitches.